Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's 76th CP program organized by Auditing and Assurance Standard Board of ICI. Today we are organizing our webinar on effective documentation is audit. This topic is very important relating to the audit, and in order to cater this, we are having with us our speaker, very learned speaker, CA Kenab Gadia ji. We are having with us our Honorable Vice Chairman, CA Vishal Doshi ji. We are having with us our Honorable Central Council Member, CA Kotha S. Srinivas ji. So on behalf of AASP of ICI, I welcome our Honorable Central Council Member, CA Kotha sir, Honorable Vice Chairman sir, CA Vishal Doshi ji, and our today's learned speaker, CA Kenab ji. So without wasting much more time, I request Honorable Vice Chairman of AASP, CA Vishal Doshi ji, for his opening remarks and welcome address. Over to Vishal sir, please.
Thank you, Anilji. Very good afternoon, friends. I, on behalf of the AASB, welcome you all to this very important webinar on, I would say, effective documentation. Friends, as Anilji mentioned, this is the 76th event of the AASB in this year. And the whole objective behind this is to ensure that more and more awareness is created with respect to the various auditing standards as well as the technical material that is available to ensure that not only our professional brothers and sisters do the audit in the right manner, but also to ensure that they follow or comply with all the standards on auditing that are applicable to them. Friends, the topic today is very important because one is documentation, and all of you would be aware that we at the ICI have always followed this mantra for our members to have on their I would say screens or offices that whatever is not documented is not audited. That is one principle which all of us should follow. But today we are going to go a step ahead, that how by way of effective documentation we can bring about more effectiveness in the whole audit. I would say efficiency as well as effectiveness. One is, doing the documentation for the sake of doing it, where you are just compiling documents and filing them. Second is to work on those documents in a manner, or to create the documents in a manner to make them part of an audit process in a manner by which, as an individual, as a firm, we are able to bring in more effectiveness and more efficiency. And friends, let me tell you, I have my personal experience also. The moment we do right documentation or effective documentation, I would say, as the topic is today, we do a lot of saving in terms of the time and efforts of not only the team, but also of the reviewer and the partner. So I feel the topic today is very, very important, and we have a very, very learned speaker. And I would say Kainas is going to speak out of her practical experience about how a document can be made more effective. I also take this opportunity to welcome my council colleague, CA Kotha Srinivas, who is very young and dynamic member and contributing immensely to various activities of the council. And I would not take much time of yours. I once again welcome you all to the 76th meeting. I look forward to active participation in all our endeavors of the AASB and of the council. Thank you. Thank you very much. Back to you, Anilji.
Thank you so much, sir, for your welcome address. We are having with us our keynote speaker, as well as the Central Council member and Vice Chairman of Committee of International Taxation, CA Kotha S. Srinivas, sir. So it is my proud privilege to share with all of you the brief profile of our Honorable Central Council member. CA Kotha Srinivas ji is a BCom graduate from Bangalore University and a fellow member of Institute of Chartered Accountant of India, and also a member of Institute of Cost and Works Accountants of India. He is a partner of SSB and Associate Chartered Accountant Bangalore. He has served the institute for over 2 decades, 2.5 years as a student committee member of SICASA, Bangalore branch, 9 years as a managing committee member of Bangalore branch of SIRC of ICI, and 9 years as a regional council member of SIRC of ICI. As a student committee member, he has served as a member and secretary of the Students Association. During the tenure at Bangalore branch of SIRC of ICI, he has served in all the positions. He was the chairman of the Bangalore branch during 2009-2010. During his chairmanship, he started distributing backpack bags to the CA students, and so far over 25,000 students have been benefited by this initiative. During this year, the branch was adjudged the best branch of SIRC of ICI, and as a regional council member, he has served from 2010 to 2019. He was the chairman of SIRC during the year 2017 and 2018. CA Kothanivas sir, as a member of SIRC, has brought in many initiatives which include conducting ARRC, Annual Regional Residential Course on International Taxation, which was successful in conducting the AIRC on international taxation. He organized regional level interstate cricket tournament for the members also. He was instrumental in collecting around 1.50 crore towards the CABF in the year 2017 and 18. He conducted around 1,000 CP hours of the program relating to the program CP programs at SIRC during the year 2017, which was a remarkable one. He has organized 5 ARIRC during the year 2017 in Southern Region, covering GST, international taxation, Ind AS, and corporate law. He prepared concept paper on coaching classes as a chairman of academic advisory group, and he was instrumental in developing digital project of the SIRC. He has improved IVR system for the members and students is made available in 6 languages. Infrastructure development at SIRC was undertaken. He has presented a numerous number of papers at study circles, meetings, workshops, seminars, and conferences on the topics covering direct tax and international taxation. He is a visiting faculty of ICI Bengaluru branch. He has also authored a very renowned book, CA Referencer for a Chartered Accountant, which was released by the Bengaluru branch of ICAI as Study Circle series booklet. He is a life member of Karnataka State Chartered Accountant Association, life member of Bombay Chartered Accountant Society, and the founder of Group Dynamics, a study group of international taxation at Bengaluru and Chennai. Still, the list is very long. I welcome you, sir. It is my proud privilege to share all of you with the brief profile of our Central Council member, C. Kothanivas, sir. So now I humbly request, sir, for your keynote address. Sir. Over to you, sir. Please.
Thank you, Mr. Anil. I think I'm audible, right?
Yes, sir.
Yeah. So first of all, let me wish each and every participant and all the panelists happy Gauri Ganesha festival. I hope midst of the festival we are sitting here on the effective documentation. In fact, let me also thank Vishal Toshi, the Vice Chairman of AASB, and AASB in particular, because this is the 76th webinar that has been organized today, and I really appreciate the efforts of AASB in organizing various programs to cover almost all the accounting standards and see that the members will be benefited immensely with these deliberations. Also, let me welcome the speaker of the day, Kainas, CA Kainas. As I was telling today is Ganesh Chaturthi, and one of the main document of Indian mythology is Mahabharata. I don't know how many of you know, or maybe everybody may be knowing, this was written by Ganapati only. So Vyas Maharaj wanted to narrate this particular epic Mahabharata, and he was searching somebody and he got hold of Ganapati. And Ganapati said, I will write Mahabharata with one condition, that you should not stop reciting this Mahabharata. And Vyasa Maharaj recited that, and Ganapati has written the entire Mahabharata. Till today, it is the best documentation that has been available in our country as such, which guides us not only in our morally and also culturally and also ethically for all of us, all the Indians as such. I'm happy to note that this one has been organized, that is effective documentation. In fact, any audit we do, documentation is very important. And from institute perspective, I should say why documentation important is, one is with respect to peer review, because today peer review is required for various things. It's not just small audits. Today, even for our branch audits, they're asking us CNDG empaneled auditors, and for CNDG empaneled auditors, we require firms which have gone under peer review audits as such. Then also this documentation is very important when once you get a notices from either income tax department, GST, or companies ROC or such. So to substantiate our claim or substantiate our audit, this documentation is very, very important. And by unfortunate thing, if there is some DC case also, documentation plays a very important role. In fact, once we talk about all these accounting, auditing standards and accounting standards, general perception of the members is that it applies only to corporate, very, very big companies, corporate clients as such. But let me clarify here, each and every person or each and every client, this documentation is very important. Auditing and assurance standards, accounting standards are important even for non-corporate associates. We have level 1, level 2, level 3, and level 4 entities. So level 3 and level 4 entities are those entities which are under the tax audits, whether it is partnership firms or even if an individual it is under tax audits. So they also have to maintain all these things. So members should not feel when these auditing standards are, accounting standards are there, it applies only to bigger companies as such. Even whenever you do, wherever you do this tax audits also, this documentation is very, very important, because tomorrow, whenever there is a query, we have to rely upon that documentation. As Vishal said, no documentation, no audit. So let us ensure that we maintain effective documentation. And today, maintaining documentation, it's not just physical documentation, even digitally we can maintain, in soft copies also we can maintain. So let us get all the documentation which is required for our audit. And more so about the topic, I think Prenaz is there. She will take you through what all the important measures that you have to take, what are all the important working papers one has to maintain so that it will be an effective documentation. So this documentation will give us inference to draw an opinion on the financial statements. So what are all the, this is basic things, documentation. In that, various things has to be maintained, like what are all the standards that we have used, how we have done the audit, who are all the people that have been done the audit, so what are the working papers. So I wish today's deliberations will definitely be more effective in maintaining the effective documentation with the experience and expertise of Kainas. I wish all of them once again a happy Ganesh Chaturthi and happy learning for the next 2 hours. Thank you, ASB, for giving me this opportunity. I thank both the chairman and vice chairman for giving me this opportunity. Thank you, Anil. Thank you, Vishal.
Thank you so much, sir. Thank you so much for your keynote address, and you have coordinated with the our topic through the methodology. Thank you so much, sir. And on behalf of WSP of ICI also, I am also giving wishes to all of you on this very auspicious occasion on Ganesh Chaturthi. And on this holiday, sir, at this particular time, more than 550 members have already joined, sir, in this webinar, sir. So if you allow, sir, can we start our technical session, sir? Thank you, sir. Thank you, sir. So we are having with us our learned speakers, Kenad Wadia ji. Kenad Wadia ji is a chartered accountant and diploma in international financial reporting from AACCA. She is pursuing post-graduation certificate in general management through XLRI, and she is presently a manager in statutory audit at Price Waterhouse Chartered Accountant LLP, and she is having more than 5 years of experience in the same field. So I request Madam Kenad Wadia ji to please elaborate the topic and enlighten all of us on various intricacies in effective documentation in audit. Over to Kenad, Madam, please.
Thank you so much, sir. Thank you, Vishal sir, and thank you, Kotha Srinivas sir, for setting the tone of the session. Once again, a very good evening to everybody present here. I would like to thank ASB and ICI for giving me the opportunity to present here today.
Yes, ma'am. Fine. Screen is fine. You're not audible. Not audible.
Sharing. Miss शाम को enable हो गया मेरे को.
Now it is fine. Now it is fine. Fine.
Okay. Thank you, sir. So the topic that we are going to cover for today is effective documentation and audit. So the topic itself as such is extremely wide, and we could maybe spend days discussing and deliberating on the same. So what we are going to cover in the next 90 minutes would be a mix of some of the topics which pertain to recent amendments in our auditing accounting field, or recent happenings around us, some of the global phenomenon which I believe would affect us, or maybe directly, indirectly, since we are part of the globalized world, and also some of the areas which have been in recent focus by the regulators, maybe by their recent reports or maybe by their recent publications. So we would be covering a mix of all of those topics today. Some of the topics which I have picked up that we would be covering from the point of view of effective documentation. So, as chartered accountants, we all agree that documentation is very important. In fact, it is the only proof of the midnight oil that we literally burn during our audit season to get the audit completed. So, today we are going to have a glimpse of some of the areas of audit, what a standard or a regulatory pronouncement requires us to do, and how we can effectively document it to meet the same. So the areas that we'll be covering today are documentation for use of auditors expert under SA 260, documentation of communication with those charged with governance, documentation of related party transactions, uh, documentation for Russia-Ukraine conflict, corporate social responsibility, and documentation for Schedule 3 and CARO amendments. So let's get started with the first topic, that is documentation around auditor's expert. If the auditor, using the work of an auditor's expert, having followed SA 620, using the work of auditor's expert concludes that the work of the expert is adequate for the audit purpose, the auditor may accept the expert's findings or conclusion in the expert's field as appropriate audit evidence like any other evidence obtained during the course of audit. But the question arises here from where our effective documentation should start is when typically does the need to involve an expert arise? So there could be a wide array of reasons, especially with new startups, technology, cryptocurrency, blockchain coming up. I believe the need will only increase and will increase in an upward trend. So we'll need to be careful of all such instances when we initially plan for our audit. These are the instances wherein preparation of financial statements would require involvement of an expert in a field other than accounting, that is, other than the audit team involved. See, for example, there could be valuation of complex financial instruments, land and buildings, plant and machinery, jewelry, maybe some work of art, antiques, intangible assets acquired, liabilities assumed during business combinations, and assets that may have been impaired. For example, valuation of stock of jewelry, oil fields like the KG3 basin valuation, impairment because of technology advancement. Uh, the second example of this could be actuarial calculation in liabilities associated with insurance contracts or employee benefits. For insurance companies, this could be of utmost importance as this is the main core based on which their entire financial statements are driven. The estimation of oil and gas reserves, where such oil wells are brought or some natural gas resources are being traded. The decision to engage an auditor's expert in the audit is ultimately the responsibility of the audit partner, as he or she is responsible for opining on the financial statements. Whether or not the expert is involved, that is secondary. The ultimate responsibility for the audit opinion would reside only and only with the audit partner. The need to involve an expert ideally should begin in the early stage of our audit. That is when we plan for the audit client, as the same would provide clarity to the team members and also ensure that involvement of expert from start to end, which would only ultimately enhance our audit quality and our audit documentation. However, the need for auditor's expert can arise at any time during the audit on emergence of new facts and circumstances. If the same arises during the audit, factors for considering involvement of experts should be clearly documented in our file. Coming now to the form and content of the agreement with the expert. So the nature, scope, and objectives of auditors' experts' work may vary considerably with the circumstances as may the respective roles, responsibilities of the auditor's expert, and the nature, timing, and extent of communication between the auditor and the auditor's expert. The agreement between the auditor and the auditor's expert would generally be in the form of an engagement letter. The following factors are some of the factors which we should take care of at the time of drafting of that engagement letter and also documenting at the initial stage of involvement of the expert in our audit. The expert will have access to sensitive and confidential information. For example, if we are involving experts, say for audit of a listed entity, the expert could have access to some amount of UPSI, that is unpublished price sensitive information. So such clauses will have to be entered into the engagement letter to ensure confidentiality of the information. The respective roles and responsibilities of the auditor and auditor expert should be clarified and should be clearly documented to avoid, like in future, if any case comes up, both their roles and responsibilities are clearly documented. Maybe multi-jurisdictional legal or regulatory requirements apply, maybe a cross-border transaction involving multiple countries. The matter to which the auditor's expert work relates is highly complex. And if the auditor has not previously used the work performed by the expert, if it is a first-time engagement between both the auditor and the auditor expert. So to sum up, the greater the extent of auditor's expert work and its significance to the context of audit, the greater would be the involvement required. So looking at some of the key points for documentation for the discussion that we had. So the decision for involvement of an auditor's expert, earlier taken the better. However, at whatever stage the same is taken, the same needs to be documented for the factors which led to decide to take the expert's involvement. If it is well known at the inception, example say valuation of oil and gas reserves, for which the engagement team would be well aware of that they do not have the expertise, the same should part of our working papers as to what led to trigger of the involvement of expert. The areas of financial statement line items to be affected, the number of experts to be involved. In case of a large multinational entity, there could be more than one complex area where more than one expert involvement is required. So for which areas the expert is required, for which line items the expert is required, and who the expert is, that should be clearly documented in our file. And it is better to have a line item wise analysis for the financial statements to determine where all the need for an expert could arise. Example, for actual valuation, maybe yes. For inventory valuation, if it is complex, say for example, some natural resources to be valued, yes. Trade receivables, if it is a normal, simple transaction which do not involve multiple complications, then no. So this way, we could have an effective documentation on our file to satisfy at the planning stage itself that a thorough and deliberate thought has been given for the involvement of expert. If the need arises at a later stage, then in detailed documentation, maybe between the management and the engagement team, between the engagement team members, for the factors that led to such involvement of expert. Then the engagement letter signed between the auditor and auditor expert should form part of audit documentation. Once decided to involve, then who has been decided to be involved should also be mentioned. The engagement letter should be detailed about scope, coverage matters, scope, agreed terms and conditions, confidentiality, regulations applicable. And in case if it is a simple engagement wherein an engagement letter was not deemed to be necessary, then any other corroborative proof of agreement between the two parties should be well documented in our file before we begin to involve expert for our audit purpose. Coming next to the competency and capabilities of an auditor's expert. Um, so this is very important as the expert has been involved for an area for which audit team required help to evaluate, and hence the expert who is involved has to be up to the mark to perform the work which could actually help the audit team in delivering the final audit opinion. So some of the factors stated below are in would could help us in assessing whether the order in assessing the expert's competence, capabilities, and objectivities. So some of these factors are personal experience with previous work of that expert, discussions with the expert, discussion with other auditors or others who may be familiar with the expert's work, or the expert's qualifications, membership of a professional body, license to practice, or other forms of external recognition. Published papers or books written by that expert, the firm's quality practices around that. Some additional factors which also could help us are educational level, professional qualification, prior experience, time spent by the expert on the engagement. If an expert organization is being involved, then some of the other factors which could help us in evaluation are reputation of the organization being involved, availability of competent and capable resources with the organization, the geographical location wherein that organization is located, the practices regarding assignment of individuals to the engagement, that if a particular expert firm is being involved and the person who are assigned for the firm are capable enough, supervision and review practices of the firm, monitoring practices for quality in services performed. So the point of documentation that comes in here is that audit team should document sources from where the competency of the expert or the expert firm has been verified. The auditor needs to demonstrate by way of documentation that independent sources have been used to verify competency of the expert. Sole reliance may be on an expert's website or a self-published information by the expert or the expert firm itself would not suffice. Herein, the audit team will need to have an independent research around the expert firm, or maybe through some independent internet research, through taking the help of the professional body with which they registered, and come to a conclusion that the expert involved is competent for the work being performed. Next point is evaluating the objectivity of the expert who is being involved. So again, this becomes very important for us to inquire about any interest or relationships that the expert may have with the audit client, as this could affect the expert's objectivity. Independence of an auditor's expert is also as important as that of the auditor, as any issue noted with the auditor's expert independence could put the entire audit independence at a risk. And we all know how important independence is for an auditor. That is the core stone based on which we start our audit procedures and based on which we issue an audit opinion. Hence, evaluation of experts' independence and having that in our file is equally important. So, a discussion should be held with the expert regarding any applicable safeguards, including professional requirements that apply to the expert, and to evaluate whether those safeguards are sufficient to reduce the threat of objectivity to an acceptable level. So, some of these points are inquiring about the expert's financial interest, business and professional relationships, provision of other services by the expert, including by the organization in case an external expert that an organization. So if an external organization is being involved as an expert, what other services could that organization be providing to our audit client? Even that will need to be evaluated. So holistic evaluation will have to be done, and the procedures followed for that will have to be documented in our file to conclude that auditor's expert is also independent. And the auditor can also obtain a written representation from the auditor's external expert about any such interest or relationships with the entity of which the expert is aware of. The next stage that comes with the actual involvement of expert during our audit. So an effective two-way communication is important between the audit firm and the expert to facilitate proper integration of the nature, timing, and extent of auditor's expert procedures. So an optimum utilization of involvement of the expert can only be done when the expert is involved throughout the course of audit, and regular, effective, and two-way communication is held. So some of the stages where involvement of experts should be done, and some of the key points to be discussed for the same are, say, team planning meetings, especially during the planning stage itself, if it has been decided that the expert is to be involved. So some of the key factors that could be noted during such meeting and documented are sharing of knowledge of risk of specific areas, assisting with development of audit plan with the audit team, to provide insight to the extent of requirement. So a clear communication between both can be established. Regular taking stock meetings should be held with the expert to discuss of the progress of the work, results performed, conclusions reached, any audit findings, any significant findings, any adverse findings. They all should form, the meetings should be held for these discussions, and these discussions should be well documented in the file to establish an effective audit trail that expert has been involved throughout the audit. Also, the meeting with the entity and meeting with the management's expert, a meeting could take place wherein between the expert, the audit team, and the client, for discussion of any risk issues identified, and if so identified, then to arrive at a conclusion for the same. So the audit file should contain details of meetings held, maybe virtual, maybe be physical, people who have been involved from the expert side, people who have been involved from the audit team side, the date and place of the meetings conducted, matters discussed, conclusions reached, and future course of action determined. This will help in establishing a logical flow in our audit as well as in our audit documentation that expert has been involved from start to end. The next point that arises here and very important is actual evaluation of the work performed by the expert. So all of these factors could be well taken into account, but if we fail to actually evaluate the work done by the expert, then the entire process could be put at a risk, because only after we have evaluated the work of the expert can we decide to treat it as a sufficient and appropriate audit evidence, as ultimately the auditor would be opining on those financial statements. So some of these ways of doing this are inquiring of the auditor's expert, reviewing the experts maybe working papers or reports, observing the auditor's expert's work, examining some published data such as statistical reports, confirming relevant matters with third parties, performing detailed analytical procedures, reperforming calculations, discussions with another expert with relevant expertise. If still the audit team has certain like remarks around the same, discussion can be held with another expert also in that field to come to a conclusion that the remarks given by both of them are on the same lines. Discussion of the same with the management's expert. So the relevant factors when evaluating the relevance and reasonableness of the findings or conclusions of the auditor's expert, whether in form of a report or any other form, would largely depend as to when the auditor could be sure that the matters being presented can be used as a sufficient appropriate audit evidence, are if those are presented in a manner that is consistent with any standards of the auditor's report, profession or industry, that how the industry and professional standards are, if the report is presented in that manner, the views are clearly expressed, including references to objectives agreed with the auditor, the scope of work performed and the standards applied, based on appropriate period and take into account subsequent events where relevant, are subject to any reservations, limitations, or restrictions of use, if any, when this has an implication on the audit. So, if such a report is available to the auditor will need to document based on all of these parameters and then conclude if the same can be used as an sufficient appropriate audit evidence. When we evaluate the adequacy of auditors' work based on appropriate consideration, so there could be two cases. One is when the matter for which the expert has been involved, there is a low risk of misstatement. The matter is straightforward. We have prior knowledge and experience with this expert. Then the auditor can ordinarily evaluate the findings and conclusions of the auditor's expert through inquiries and reviews of the final reports produced. However, if the matter is significant, it carries a significant risk of material misstatement. The matter is complex with judgments involved. Auditor's expert is performing significant audit procedures and the auditor does not have any prior knowledge and experience with the expert. He may consider performing more rigorous procedures, for example, evaluate the findings and conclusions of auditor's expert by performing reviews of the detailed working papers, reports, further inquiries if necessary, further corroborative procedures, including detailed analytical procedures, reperformance of calculations or data used by the expert, involvement of some third parties. So this will largely depend on the matter for which the expert has been involved and as to how relevant that is for a risk of misstatement in our audit and in our audit opinion. If it is a straightforward thing, or maybe by evaluation of the auditor's report and documenting that would suffice. However, if it is a complex or a significant risk, auditor will need to perform more corroborative procedures, and those corroborative procedures will have to be documented. So the relevance and reasonableness of any significant assumptions used in such case by the auditor's expert should be well documented. The procedures that the auditor performs to test relevance, reliableness, completeness, accuracy of source data used by auditor's expert to form part of audit file. So whenever such factors are being evaluated, they need to form part of our audit file. Whatever procedures that were discussed above or a combination of those could be used to evaluate the work and documented therein. evaluation of risk of misstatement by the audit team, and subsequent disposal of the work used by expert in that area. So whatever significant risk was identified by the audit team because of which the expert was involved, and the subsequent conclusion reached by the audit team after evaluating the auditor's work should form part of our audit documentation. Hmm. The next is reference to expert in the auditor's report. So the auditor ordinarily should not refer to the work of an auditor's expert in auditor's report if it is containing an unmodified opinion, unless and until it is required by any law or regulation to do so. And if such reference is required by a law or regulation, the auditor shall indicate in the auditor's report that the reference does not reduce the auditor's responsibility for the audit opinion. The second case scenario could be that if the auditor makes reference to the work of an auditor's expert in the auditor's report, because such reference is relevant to understanding of a modification. That is, when a modified opinion is being issued to the auditor's opinion, the auditor shall indicate in the auditor's report again that such reference does not reduce the auditor's responsibility for that opinion. So we should be very careful when referencing auditors' work in our audit opinion. If it is an unmodified opinion, there should not be need to refer the auditor's expert in that opinion. If it is a modified opinion or if it is required by laws and regulations, then along with the report being issued, the reference to such laws and regulations, the reference to why such modifications had been given should form part of our documentation. A thorough and effective documentation should be done around those factors so as to corroborate and so as to ensure that the correct report is being issued. And again, the ultimate responsibility for use of auditor's expert would lie with the auditor and auditor only, and nowhere should an evidence contrary to that should be documented, because the ultimate responsibility for the audit opinion would rest with the auditor's expert. So we can just take like a minute to reflect on the discussion that we had around auditors expert and the documentation around that before, and any questions that we may have before we go on to our next topic, that is documentation for communication with those charged with governance. So now we'll begin with our second topic, that is communication with those charged with governance and documentation around these. So communication with those charged with governance may seem a very easy or a straightforward thing, but this has been a very heightened area of discussion and observations by the regulators, and hence we'll go through what all communications are required to be done, how and when it is to be done, and also what documentation steps should be taken in order to be able to prove that effective communications were done as per requirements of the standard. So the objectives of the auditor as per SA 260 are to communicate clearly with those charged with governance, the responsibilities of the auditor in relation to the financial statement audit, and an overview of the plan, scope, and timing of the audit, to obtain from those charged with governance information relevant to the audit, to provide those charged with governance the timely observations arising from the audit that are significant and relevant to their responsibility to oversee the financial reporting procedure, to promote effective two-way communication between the auditor and those charged with governance. So the auditor shall determine the appropriate person within the entity's governance structure with whom to communicate. It could be the board of directors, audit committee, committee of independent directors. So the first step for this should arise by way of deciding as to who should, as the auditor should communicate with who, and or a combination of committees or persons in order to ensure effective effective communication. This will arise from our understanding of the entity obtained via SA 315, that is understanding of the entity and its environment. When we understand the governance and the legal framework of the entity, so whatever persons are decided by the auditor that okay, these 4 5 persons are to be communicated, they should be linked back to a documentation of understanding of the entity so as to form a proper linkage between the two and to ensure that all those relevant bodies or persons with whom the communication was to be done has been done. With the ever changing landscape in the business, it has become more and more important to have a regular communication with TCWG, as this is also a very heightened area of focus nowadays by the regulators as well, and whatever communication is done needs to be done up to the mark, and more importantly that should be documented. So, if the auditor communicates with a subgroup of those charged with governance, say any committee formed by the board or committee formed by the company, for example, say an audit committee, or an individual when that person is also in the hierarchy of TCWG, the auditor shall determine whether just communication with that board is sufficient, or whatever communication was done with that subgroup needs to be communicated to all the persons responsible for governance. In some cases, also, we may know that all those charged with governance are involved in managing the entity. For example, say a small business, a single family owned business, mainly for private entities. And there could be no one else in the government role. The same is not required, maybe by Companies Act or by any other act. And it is just the promoters or the owners are there in the governance role. In such cases, if the matters required by the standard are communicated to the management, and the management itself is in the governance role, a separate communication is not required. Of course, there is no point in communicating the same thing or twice to the same person. But nonetheless, the auditor should be satisfied that the communication with the person in the management responsibility adequately informs all those whom the auditor would have otherwise communicated in their governance capacity as well. So some of the key points for documentation around this from what we just discussed, that is determination of appropriate person as those charged with governance. Only communication maybe with audit committee, only with the board of directors would not be appropriate. A holistic view needs to be taken on this communication. Those charged with governance identified ultimately those to whom the auditor decides to communicate should have the power to take action against the management is required in case of any fraud reporting being done, any catastrophic event happening. If the auditor communicates to those charged with governance, uh, they should have the power to do something based on the communication done by the auditor. Only then will the objective of governance be complied with in letter and spirit. It is only then that the actual governance part would come into play. So the auditor will need to document even the powers or the roles and responsibilities of those charged with governance with whom we are communicating in order to ensure that it is held up in letter and spirit. To maintain effective audit trail of the communication done, including if done with subgroup wise, could be a good practice also for the auditors to have a meeting with independent director once without involvement of the management. So whatever such steps or meetings are done by the auditors, they need to be well documented in the file along with the matters discussed, any significant matters discussed, and their respective what view could be there on the audit report, or to keep updated date-wise records of the matters being communicated, where matters communicated by the standard on auditing can be communicated orally. The auditor shall include them as well in audit documentation and when and to whom they were communicated. Where matters have been communicated in writing, the auditor shall also retain a copy of the communication of that of that communication as part of audit documentation. That is very important to keep a track of each and every communication being made. Next point is that just communication by way of PowerPoint presentation, maybe to by the auditor to those charged with governance, cannot be said to have been an effective communication, as there is no two-way linkage established between those. So a two-way communication should be held, and only a presentation being submitted would not suffice the two-way communication required by the standard. The plan and scope and timing of audit, if it is required to be communicated by the auditor to TCWG, the same should be communicated at the initial stage of audit, that is actually when the planning for audit begins, and not towards the end of audit, that the same is being communicated along with the conclusion. That would not suffice. So the auditor will need to document step by step communication as and when it is required, and at the stage of audit when it is required. The auditor shall communicate with those charged with governance an overview of the plan, scope, and timing of audit, which includes communicating about significant risk identified by the auditor. Significant findings from the audit will need to be communicated, including the auditor's view about significant qualitative aspects of the entity's accounting practices, including accounting policies, choice, estimates, financial statement disclosures. So anything significant that the auditor finds about these during the initial stage or whenever identified, they need to be communicated. When applicable, the auditor shall also explain to those charged with governance why the auditor considers, say, a particular practice that is acceptable under the applicable reporting framework not to be most appropriate. So, if the auditor has any inhibitions or has any contrary view to that of the management, the auditor should upfront communicate it with TCWG. Any significant difficulties encountered during audit, those also need to be communicated. And unless all those charged with governance are involved in managing of the entity, just like we discussed in case of a private client, significant matters arising during audit that were discussed and subject to correspondence with management, they also should be communicated to TCWG. Written representations that the auditor is requesting, circumstances that affect form and content of audit opinion, if there is any expected, say, modification, qualification in the audit opinion, any other significant matters arise that in auditor's professional judgment are relevant for those charged with governance. Going on, focusing specifically on listed entities. So for these, the auditor is required to communicate to those charged with governance a statement that the audit team and others in the audit team are independent and and that they do not have any, say, vested interest or any such interest in the in the audit client, which is prohibited by the laws and regulations. So for this, the auditor is required to communicate all known relationships and other matters between the audit firm, if the audit firm has a network of firms, then that and the entity, which an auditor's professional judgment could bear or could have an adverse impact on independence. This shall include the total fees charged during the period covered by the financial statements for audit, non-audit services provided by the firm or by the network firm to the entity or to the group entities of the audit client. The fees shall be allocated category wise to assess those charged with governance to decide on the independence of the auditor. The relevant safeguards that have been applied to eliminate significant threats to independence and reduce them to an acceptable level. So, a thorough communication regarding the independence matter needs to be done by the auditor to the audit committee, and a proper record of the same should be maintained as to how the data arrived at has been arrived at and in what form and manner it has been communicated. So, we are required to maintain proper records and corroborative evidence of each of the significant matters being communicated, how the matters are selected, where tested, the relevant discussion with the management around those, and discussion with TCWG around that, their observations and their respective disposals. If any challenges or difficulties were faced during the audit, communicated or during the audit example communication, proof of prior discussion with management, difficulties in collecting of data, resistance by the management to provide the data or cooperation. So if any such factors have been noted by the auditor, appropriate documentation should be done with corroborative proof for such factors being noted, and they should be categorically be communicated to TCWG. To have proper records on audit file as to how independence was communicated to TCWG by gathering all the relevant data that we just discussed, and also to ensure that whatever reporting is being done in the financial statements, what documentation is being done by the auditor regarding the independence and the fee structure, and what is actually being communicated to TCWG. They all should be in sync and be matching. Next, we come to the communication process. So the auditor shall communicate with those charged with governance, the form timings, and an expected general content of communications. The auditor shall communicate in writing to those charged with governance regarding significant findings from audit. If in auditor's judgment, the oral communication would not be adequate, then whatever significant findings are there from audit, they need to be communicated in writing, and the auditor shall evaluate whether two-way communication between the auditor and those charged with governance has been adequate for the purpose of audit. If it has not been, then the auditor will need to evaluate the effect, if any, on auditor's assessment of risk of misstatement of the entity to obtain sufficient appropriate audit evidence. So in case if for some reason effective two-way communication was not possible with TCWG, the auditor will also need to take that into record on the audit file. The communication for significant matters done, especially towards the end of audit, towards conclusion, should be consistent with the financial statements and work papers. So the data being communicated and the data being documented and the data being presented in the financial statements, they all three should be in sync and should be well documented in the file. The significant matters noted and management comments around any such significant matters noted should also be disposed in our audit working papers, which are being communicated to the TCWG. So just finding of significant matters is not sufficient. It has to be appropriately communicated to those charged with governance. The communication with them is as important as it is reporting on them. So this brings us to the end of our second topic, that is documentation around effective communication with those charged with governance. So we'll just take a while to deliberate on that if there are any questions around this before we proceed to our next topic. So next topic, that is the third topic for today, is documentation for related party transactions, covering around SA 550. So to document, first we are going to discuss for related party transactions through various identification processes of such transactions, and what internal and external sources do we have. Because in today's scenario, with the complex structures that the companies have formed, maybe multiple group structures, special purpose vehicles, complex hierarchies, multi-jurisdictional entities spanning across various countries. So identification of related parties has become as important as testing and reporting on them. So first we'll focus on the process of understanding how identification of related parties should be done, their effective documentation in our audit file to ensure that all required procedures were done from the auditor's end for identification, and then proceed towards their testing and their conclusion. So understanding to so first step would be understanding through SA 315, that is the understanding that we have obtained for of the entity and the environment during the planning stage. Whatever discussions were done pursuant to SA 240 during our planning stage, that is identification of any fraud or any such parties which could have an heightened risk of misstatement or fraud. Inquiries with the management, inquiries with people other than those involved in managing the entity, maybe with the HR personnel, maybe with the person responsible for compliance with ethics of the company, reviewing the internal audit report, whistleblower policy, our own prior year working papers, inquiry as the affiliation of directors, officers, and other entities, with which entities do they have affiliation with, review of shareholder records to determine the name of principal shareholders, if appropriate, obtaining a listing of them, Review of minutes of meetings. This is very important when we go on to identify related parties. Meeting of shareholders, board of directors, other statutory records such as a register of directors, interest for information about material transactions authorized or discussed at their meetings. So maybe not from the minutes of meetings, but from minutes of discussion that are being held between the board of directors. If we find that any one party which is being given more importance or undue importance, which is not appearing as such in the related party list, that could be a trigger that there can be some unidentified related party. Uh, Reviewing the filings with other relevant authorities, say Ministry of Corporate Affairs or the SEBI. Review of correspondence and invoices for law firms for such possible transactions. Review the extent and nature of business transacted with major customers, suppliers, borrowers, lenders. So if there is some unusual business being transacted with one or two particular customers or vendors which are not per se in a related party list, that could help us, that could be a trigger for us to identify. Reviewing the names, officers, and trustees of pension plans that the company has. Inquiry of other auditors currently involved in some other audits, say secretarial audit, cost audit, predecessor auditors, bank, legal, or third party confirmations obtained as part of audit procedures. Independent search on the internet for the auditee to identify if any such that there is some news of any some new acquisition, takeover, merger, any such thing happening. So these are some of the ways which could help us identify the related party relationships, and whatever ways and means, maybe not all, a combination of few, whatever have been actually been deployed by the auditor for this should be well documented in our audit file. Moving on to some of the indicators that we may note for weak controls over related party transactions. So the low importance attached by the management to identifying and disclosing related party relationships and transactions, the lack of appropriate oversight by those charged with governance, and intentional disregard for controls because related party disclosures may reveal information that management considers sensitive. Example, existence of transactions with the promoter family members, insufficient understanding itself by the management of the related party requirements of the applicable financial reporting framework, the absence of disclosure requirements, say in the financial statements of the related party transactions. So the process for identifying of related party is as important as actually testing related parties, and the factors evaluated to conclude that no material weakness exists around controls for related party will have to be documented in detail as to what procedures or what controls the client itself follows for identification of related parties, to document and test those controls in our audit file, and then to conclude that, as we discussed above examples, that no such material weakness exists in the control from the management side. And if we conclude that such weak controls do exist, then what other steps can be taken to mitigate such a risk that arises, if possible? If not possible, then what bearing it could have on the auditor's report? So moving on to the next risk that the related party transactions could pose. A major risk that is there is the risk of unidentified related parties. It could be intentional or it could be unintentional on part of the management. So we'll discuss first some of the ways by which we can identify uh, such uh, such unidentified related party transactions and the steps to be taken for the same. So to perform procedures like third party confirmations obtained by the auditor, in addition to the bank and legal confirmations, entities income tax returns, information supplied by the entity to regulatory authorities if there has been any, say, notice received from any regulatory authority and what replies were submitted by the entity, a shareholders register, statements of conflict of interest from management and those charged with governance, records of entities' investments, pension plans, contracts and agreements with key management personnel or those charged with governance, significant contracts and agreements not in the entity's ordinary course of business, specific invoices, correspondences from the entity's professional advisors, life insurance policies acquired by the entity, significant contracts which have been renegotiated during the period, renegotiated terms being renegotiated, internal audit reports, documents associated with entities filings with a security regulator, say for example prospectus, establishment of business through special purpose vehicles, participation in unincorporated partnership with other parties, a very high risk trigger because it could be an unincorporated partnership wherein we could get to know that two parties who will not know are related, if they are entering into such a partnership, will need to perform more procedures to conclude that those are not related parties. Agreements for provision of services to certain parties under terms and conditions that are outside the ordinary course of business, guarantees and guarantor relationships, review of bank confirmations that may indicate a guarantee guarantor relationship. So guarantees are such an off balance sheet item which normally we could not assess from our normal audit procedures. However, from the bank confirmations that we obtain, if therein a guarantee is being shown, say as a collateral security, that could lead us to knowing that if for a particular entity our audit client has given a guarantee, then that could be a trigger for an unidentified related party relationship. Review of investment transactions, sale purchase of securities, equity interest in joint ventures, reviewing large or unusual transactions, especially near the end of reporting period, may indicate related party transactions. If management intention is to increase the profit or sales or to show higher losses, so with which parties, if there has been a sudden spike in transactions being held, especially near the year end, that could also be an indication of an unidentified related party. If at all any such unidentified related parties are identified, we'll need to document the procedure which led to identification. So we have covered like a host of possible procedures that we could perform, which procedure was performed, which procedure actually led to identification of such an unidentified related party will need to be documented. We'll have to request the management to identify all such transactions with the newly identified related parties. Maybe we could have identified that from a one-off transaction, but we'll need to evaluate all the transactions done with that. Uh, was that how come the entity failed to identify that related party? Was that a control failure? There weren't sufficient audit controls around related party transactions. Was the control operator weak? Uh, all new substantive audit procedures, in fact extensive procedures, will have to be done for the newly identified related party, and the same will have to be documented in the file step by step, starting from its identification to what all procedures have been done to ensure that there has been no risk of misstatement in the transactions done with that related party. Again, the most important thing that will have to be evaluated here is, was the non-disclosure by the management intentional, or was it actually an oversight or an error? As an oversight or an error would lead to weak controls around related party, but even worse, if it is intentional, then that would impact the overall risk assessment that we have of the entity, as it would question the integrity of the management, and it would put a question mark over all the controls or all the information that is being provided to us. So just identifying an unidentified related party would not do. There will have to be exhaustive audit procedures done around that, starting from that to going to the root cause of why it was left unidentified, and also evaluating impact of the same on our audit opinion, and documenting the entire trail so as to justify that sufficient appropriate audit evidence was gathered for such happenings. Mm. The next aspect which comes in related party transactions is procedures to be documented for identifying the transactions which are outside normal course of business. So the related party could be disclosed, but the transactions are not normal like everyday sale or purchase. They are outside the entity's normal course of business. So this could be complex equity transactions such as corporate restructuring or acquisitions, transactions with offshore entities in jurisdiction with weak corporate laws, say tax haven countries, leasing of premises or rendering of management services by the entity to other party if no consideration is exchanged, sale transactions with unusually high discounts or returns, transactions with circular arrangements, for example, sales with a commitment to repurchase, sale or leaseback sort of transactions, transactions under contracts whose terms are changed before expiry. So just before the end of the contract, the terms are renegotiated or modified, maybe to suit one of the two parties to the contract. Transaction with government agencies, large cash payments being made, requiring use of a third party or a moderator, large transactions being done with that third party, transactions with entities in industries, geographies which with increased risk of corruption. There are some countries which are known to have weak taxation laws, weak governance laws. So, high amount of transactions were done with such countries or such jurisdictions. A sale transaction with large or unusual commission. So here, what procedures need to be done for such related party transactions which are outside the entity's normal course of business? So the business rationale for entering into such transactions will have to be extensively documented on our audit file as to why it was important for the entity to enter into such a transaction, maybe which was a one-off transaction or which is definitely outside the normal course of business. Terms of such transactions should be documented to conclude that even if it is unusual, there is no risk of misstatement being identified. So each and every term of that contract has to be evaluated, appropriately account for and disclose in accordance with financial reporting framework. Even though they are outside the normal course of business, they have been appropriately disclosed in the financial statements. And if they are related party transactions, then appropriate approvals as per statutory requirements and control hierarchy. Say approval by the audit committee, by the board of directors, and even in internal approvals, say following their approval matrices, maybe approval by the managing director, CEO, VP, something of the higher level approvals are there in place. And whatever approvals have been obtained for such transactions which are outside the normal course of business will have to be brought in our file, documented, and a conclusion reached that such approvals are appropriate and there is no further risk of misstatement that the audit team has identified. Next, and a very unusual, however, not unusual, which could be easily concealed, a sort of a risk that related party transaction carry, are domination of management by a single person or a small group of persons without compensating controls. So there could be a certain individuals or a group of individuals among the management who are dominating the entity, dominating the decisions taken by the entity, and such. If it is known to the auditor could perform procedures around that. But in many cases, it is possible that the same is not well known to the auditor, because of course, if such a transaction is being done, it would be well concealed, well hidden between the layers of the company. So some of the factors of such dominant influence being there, we'll first evaluate those factors and then evaluate the documentation and the audit procedures required around these. So the indicators of these could be that the related party has vetoed significant business decisions taken by the management or those charged with governance. So they have a veto power, veto voting rights, based on which whatever decisions are being taken by the management or governance, they intend to block those decisions, not allow those decisions to go forward. Significant transactions are referred to that particular person for approval. There is little or no debate at all among management and TCWG regarding business proposals which are initiated by that particular related party. Transactions involving the related party or a close member of the related party are not independently reviewed. An unusually high turnover of senior management or professional advisors in the company, that could suggest unethical or fraudulent business practices, which leads to such a high employee turnover. Evidence that the entity's excessive participation or preoccupation with the selection of accounting policies or determination of accounting estimates, that may suggest that if that party is very much involved in in finalizing the entities estimates, accounting estimates being used, accounting policies being used, there is an excessive interference on that part. That could also be a possible indicator that such a dominating related party exists. So the main risk here is fraudulent financial reporting often involves management override of controls that otherwise may appear to be operating effectively. So if such a party exists, then this is the biggest risk that we as auditors would carry. Some of the trigger points could be creating fictitious terms of transactions with related parties designed to misrepresent the business rationale of those transactions, ultimately to facilitate the dominating party, fraudulently organizing the transfer of assets from one or from one to another, embezzlement of cash, misuse of company property, engaging in complex transactions with related parties such as special purpose vehicles that are structured to misrepresent the financial position or financial performance of the entity, maybe for tax saving purpose, for indirect benefits to the related party. The auditor will have to be very vigilant for such transactions as it will not be easily identifiable through normal audit procedure. Proper unpredictability testing will have to be designed and documented around these. Testing for management override of controls will have to be very strong if such an indicator is observed, and what testing is done and how the same is being documented in the file will have to be taken more care of if such a transaction is identified. Uh, so we'll also need to first document the factors which led to identification, by maybe by piercing the corporate veil, going through the structure and layers of companies as to how such a related party was identified, discussion with the management, with those charged with governance about the same to take their view on the same, also to assess if there is a widespread collusion that the dominating party actually dominates all those with management, all those charged with governance, and it is not possible to have an independent view. Extra audit procedures need to be performed to mitigate the risk and also to evaluate if the risk can be mitigated or it would have a bearing on our audit opinion. So, if such a dominating related party transaction or a party is identified, exhaustive procedures will need to be documented around that to identify that party and what steps have been taken by the auditor to mitigate the risk that the dominating party possesses. Next, we come to the arm's length assessment, another very important factor for related party transactions. We'll first need to evaluate the procedures done by the management to ensure arm's length assertion. It is a default assertion with the related party transactions being done that they would be at arm's length. This will have a wide implication not just on our audit, on taxation, transfer pricing, and all. So, in detail, procedures done by the management to ensure arm's length assertion will need to be documented. Regulatory approval of board or audit committee in a timely manner as required by the statute will need to be there for approval of say price with related party, transacting price with related party, and the same will also need to be documented in a chronological manner in our audit file. If a post facto approval has been done, say after the transaction has taken place, the same will need to be taken on our file and evaluated for non-compliance. Hmm. We will also need to document procedures performed to meet arm's length assertion, say comparison with third party prices, industry and market benchmark, and when benchmark are not available, and if it is a complex transaction, even to evaluate the need to involve an expert for the same. Uh, Whatever we have discussed so far for related party transactions, if any discrepancies have been found, their uh, their bearing on the audit opinion will have to be discussed and documented. Uh, what communication has been done with those charged with governance for related party transactions, that will have to be documented in our file, and management representation also, that they have disclosed all known related party to us, the transactions are at arm's length, there are no undisclosed related party relationships. This also will have to be taken from the management, and this will have to be a part of our audit documentation. Of course, this would not relieve the auditor of their responsibility, but at the same time, it would be better to have a management confirmation as well on related party relationships and have that documented in our file. So this brings us to end of our third topic for discussion, that is documentation for related party transactions. So we'll just take a minute to deliberate on this if there are any questions before we move on to the next topic, that is documentation around the recent happening Russia-Ukraine conflict. So, as we all know, the recent military invasion of Ukraine by Russia. This is a recent happening global event. Uh, so, the first question could be as to why this is being covered, why this needs to be deliberated, and why this needs to be documented. So, we will evaluate that in our next slides as to why this is also equally important for any business, whether they have global operations or not, operations in the conflict or say the conflicted territories or not. Still it is important for us as auditors and also for management to evaluate the impact of this global phenomenon. So it may be very easy for businesses which have local operations, no international operations, to conclude that there is no impact on them. However, we should not forget that we live in a globalized world where everything is interconnected, and hence there will be implications of such a huge global event on everyone, especially considering the countries that are involved in the conflict. Of course, impact is something which will have to be evaluated on a case to case basis. It is not that every company or every audit client would have an impact of the same, but to conclude for that, we'll need to have certain procedures in place. So the Russia military invasion of Ukraine will have widespread economic impact on entities in the immediate region. Not only that, but it will also impact entities globally where businesses engage in economic activities that may be affected by the conflict. So this could be the next big thing after, like, we had an impact or are still having in certain cases impact of the COVID-19 pandemic. So this will also continue to have a bearing on global business, maybe say for a year or two, depending on how the situation evolves. So, some of the starting factors to consider to evaluate our effective audit documentation around this is understanding of the situation, to document discussion with those charged with governance and management to understand their view of the situation. This will provide us a basis for further audit risk assessment as to what the management has thought of for the situation, to maintain professional skepticism on our part and challenge management's conclusions that their business operations will not be significantly affected simply because they are not directly operating in the region where the conflict is taking place. For example, a very simple example of this is the crude oil prices have been increasing since the conflict has started, and in response to concerns about world supplies, which will significantly inflate the operating cost of almost all businesses. And hence, a simple example of crude oil, the impact of that would be multifold as it impacts the base level supply chain, that is transport cost. And hence, to just conclude that there is, to right away conclude that there is no impact of this conflict on a business would not be correct. How much is the quantum of the implication will have to be evaluated, and it will start again with our understanding of the business obtained through SA 315, and then interlinking of the factors that we are going to discuss to come to a conclusion if there is or there is not an if not an impact on our audit client. We'll also need to inquire and document whether the entity has a framework in place to assess the risk in their stakeholders. Examples say customers, vendors, business partners, or products or services having geographical exposure to such regions which have been affected by sanctions. Obtain an understanding of internal controls the entity may have implemented to protect against engaging with transactions with countries or entities that are subject to sanctions. To document and file, even though there is no impact noted, as it is a significant and evolving international event which will definitely have widespread impact. So now we'll discuss some of the possible factor-wise implications and what factors have to be taken care of while auditing, while documenting, and to help us reach a conclusion for the impact of this event on our audit client. So first and foremost, and one which has been much discussed of, is are the economic sanctions. So, as we are all aware, a broad array of economic sanctions targeting the Russian and the Belarus economies have come into place. Certain Russian and Belarus businesses, assets of such certain citizens have been blocked. So, this could simply be any of the vendor, customer, supplier, employee, group company, associate, subsidiary of our audit client, and hence this could be the first trigger point to identify if any such if any business partner, any such a business relationship is subject to such sanctions. The number of nations implementing sanctions and the number of sanctions also being implemented are rapidly evolving, and they are daily changing, which means that maintaining compliance will require regular monitoring. So the assessment will change as the time evolves, as the situation evolves, and we'll have to be alert and keep our audit procedures and our document up to date for that. Prohibitions of transactions with certain individuals and financial institutions, export control restrictions which would be imposed to prohibit export of certain technologies to those regions, territory embargoes wherein entities may be prohibited in dealing with certain territories or regions, blockage of access to SWIFT system. This is a very important happening for specific Russian banks, limiting the ability of customers or Russian entities to pay for past purchases of goods or services, to repay debt, or to complete securities or asset trades. Closure of airspace of certain territories. So this will again lead to restricted movement. Uh, so while evaluating these, if we actually identify any such vendors or customers which are operating in such a conflict area. Say for example, if we have identified any trade receivables that the entity has, any customers who are operating in that area or who have significant business transactions in that area. So say provisioning for such trade receivables of the affected region will carry a very high risk now, given all of the above economic sanctions, and automatically the chances of recoverability of such receivables would reduce to low, and hence special provisioning or a separate provisioning for these receivables will need to be done. They cannot be bucketed and grouped with the other receivables, because the global factors around these receivables have changed now. The aging and bucketing will have to be done separately. What factors are taken for that will have to be documented, and the ultimate conclusion reached. Same way, if there is inventory which is specifically meant for that region, or inventory which has some market in the affected territory, so the NRV assessment of that inventory will have to be done separately, taking into consideration the global factors, whether the inventory is still sellable, if it is sold, whether the proceeds would be realized for that or not. Same way, if we have trade payables in that region, so because of the SWIFT blockage and also the restrictions being imposed for any transaction with say the Russian entities, so would it be possible, even if the client is willing to make the payment, would it be possible for that payment to be made will have to be evaluated. Forward contracts are to be evaluated if it is still in money or it requires to be charged off to PNL. So these are just some of the few factors which will have to be taken into consideration while evaluating the impact of this conflict. Next, we come to the supply chain disruption, which could be there. So there is a wide-ranging possibility of impacts to supply chain of commodities, say energy, earth metals, and other materials. Transport disruptions, export control restrictions, which could be there. So the impact of such disruptions should be considered, as they may have on entities' operations, cash flows, financial position, and related impact to financial statements as well. A supply chain disruption would lead to raw material shortages, which limit the entity's production output and result in reduced profitability and cash flows. It will impact the overall financial performance as well if there is a dependency, say, on raw material from that region. So we'll have to document impact by understanding developed from SA 315 as to how ultimately these factors would affect an entity. The next comes is operational disruption that could be there. So entities sourcing products or materials from Russia or otherwise relying on vendors or contractors from Russia may find it difficult that those entities have been sanctioned, and hence now it is difficult to procure those materials. or any other issues that have potential to affect the to negatively affect our revenues, profitability, cash flow, which may lead to short. So these factors will obviously affect our profitability and cash flows, because now the entity would have to identify a new vendor or say a new customer, which could result in higher cost, lower profits, and hence will impact the short term liquidity of the client. Also, there could be an inability for personnel to move between entity locations, which could have a direct impact on effectiveness of entities, processes, and internal controls. Whatever factors are noted in operational difficulties, these also will have to be documented, and not just documented, their financial implication would have to be assessed to conclude whether the same have a bearing on our audit opinion or not. Next, payment and inter entity transfer disruptions. So the entity will need to consider any credit risk related to expected payments, whether related to accounts receivable arising from sale of goods or services, or related to formal debt agreements, such as the credit risk which may arise, say from blockage of SWIFT system for Russian banks, termination of payment networks, for example, Visa, Mastercard, they all have stopped operating in that territory. So we'll need to reassess as to how these payments will actually be made. And also FEMA regulation, say for example, if it is an Indian client, FEMA regulations also will come into account if the accounts payable and receivable are not able to settle within an appropriate time period. Even the evaluation of laws and regulations will come into play here. Next is investment risk. So if the entity has investments in Russian assets or invests in debt or securities of businesses with operations that rely significantly in Russia, or how they rely, or if they have a subsidiary or a joint venture therein. So again, we'll need to evaluate what risk do those investments carry. Impairment analysis will have to be done for those investments, taking into account current global factors. Going concern will need to be evaluated for such investments, as majority of the companies, say majority of the global companies, have decided to pull out from the disputed territory. So how do we assess our risk of impairment going concern for such investments? Another very important risk that would arise is the risk of cybersecurity attack. So, cybersecurity incidents may relate to unauthorized access to financial reporting applications, which may have a direct implication on the financial statements. Other such incidents may not directly affect the financial statements, but will present operational or reputational risk for the client. So, if we have businesses in those areas, special consideration will need to be evaluated for the cybersecurity risk as well. And if such a instance has been noted, then what steps have been taken by the management to overcome the same, and the same will need to form part of our audit documentation. Next, coming to the legal and regulatory compliances. So, the economic sanctions imposed on individuals, organizations, or countries that are directly or indirectly related to the entity may introduce new legal and regulatory compliance matters for the entity to consider. Given the unprecedented breadth and the rapidly evolving nature of sanctions and potentially significant repercussions to an entity found to be in non compliance, it will be very important to perform inquiries and other risk assessment procedures around the same, and to keep on updating our understanding as this is an evolving situation. We'll need to have a more thorough documentation around our compliance with laws and regulations in view of these increased sanctions. And after a careful evaluation of all of the factors that we just discussed, if we do come to a conclusion that there is an impact on the audit client, we'll need to evaluate for the reporting implications. Modification to an auditor's opinion could be there due to risk of misstatement, material misstatement identified because of these factors, or inability to obtain sufficient appropriate audit evidence because of, say, closure of operations there, data not being able to transmit from those disputed territories. If the evidence is not that severe, however, it is important to bring to the notice of the stakeholders. An inclusion of key audit matter could be considered. An inclusion of EOM could alternatively be considered if it does not have bearing on the audit opinion, and if it actually does have a bearing on the client's business, inclusion of going concern related assessment for uncertainty of going concern based on the factors that we just discussed could be included in the audit report. So this brings us to end of the topic for discussion for Russia-Ukraine conflict. So again, just reiterating that maybe there are no specific say steps to evaluate for these and to document for these, but of some of the factors that we have just considered, they will need to be evaluated and will need to be documented. Either way, however we conclude whether there is an impact or there is not an impact. So we'll just take a minute to deliberate on this before we move on to the next topic. So the next topic for our discussion is documentation around corporate social responsibility. So what we'll be covering herein would be the documentation around CSR provisions, the recent amendments which have come to the CSR provisions, and will also interlink them to the recent amendments in Schedule 3 and CARO 2020. CSR also, as we all know, this is a very heightened area of focus by the regulators from compliance per se, and also after its recent inclusion to be reported in our CARO report as well, and also the amendments being made to Schedule 3. The some of the key points to take care of when we are dealing with this would be start. Obviously, it would start with to document the applicability of Section 135 of document the applicability to a particular audit client, and the applicability would have to be assessed under Section 135 of the Companies Act for the condition say if the net worth is above 500 crores, a turnover above 1000 crores, or net profit of 5 crores or more. The board of directors of the companies covered in the above criteria will need to ensure that at least 2% of the average net profits of the company have been spent as CSR under as required under Section 135. And if the CSR provisions also what need to be taken care of while documenting the applicability itself of the CSR provisions are that they are if they're not applicable for a particular financial year, we'll need to check applicability of the past 3 financial years, as applicability of Section 135 would only cease if the company is not falling in this criteria for 3 consecutive financial years. So this has been stated in the technical guide on accounting for expenditure on corporate social responsibility issued by ICI, that if once CSR provisions are applicable, we'll need to check for contribution to be done based on average profit of past 3 years for 3 years. So this is again an important point which could be missed when we're evaluating on previous on only on the first criteria that we discussed, that is the previous year criteria for the turnover, net worth, and the net profit mentioned. So the auditor will need to first of all document based on which the auditor has concluded that the entity has appropriately selected CSR applicability or not. So this would be the starting premise for us. Then we'll also need to document if the secretarial compliances around the constitution of CSR committee, composition of CSR committee, responsibilities including approval and monitoring of CSR projects and budgets are being done. Also, if the company does not meet the stated 3 criteria, they would need to constitute a CSR committee consisting of 3 or more directors, out of which at least one director shall be an independent director. So, whatever statutory compliances are mentioned for constitution of a CSR committee, those will need to be complied with for companies which are required to constitute a CSR committee. Also, if a company is not required to constitute, is not required to have an independent director, maybe for private companies or certain unlisted public companies, the company shall have in its CSR committee 2 or more directors. So there are many statutory compliances also which will need to be followed once we conclude that the provisions for CSR are applicable to an entity. So the next part, which will form part of our documentation, would be ensuring that whatever the statute requires for composition of the committee, the same has been complied with by the entity. And also there is a relaxation given in the statute that when the amount to be spent on CSR does not exceed 50 lakh, the requirement for constitution of CSR committee is not applicable. So even these relaxations and exemptions given will need to form part of our audit documentation. The next thing, once we have concluded on both of these factors, the next documentation that would come up would be to document for appropriateness of computation as per section 135. So section 135 states that for purpose of CSR spend, net profit shall be computed in accordance with provisions of section 198 of the Act. PBT is to be taken for such computation. So if the client has taken any other benchmark for computation, it would be a non-compliance, and that same would have to be documented. Even if the client has taken PBT, we'll need to perform, say, a recomputation for all the factors that are stated under section 198 to state that the amount computed by the company is in accordance with the statute, and that will have to be documented as to how we have evaluated that the amount is correct. To establish a cross linkage by way of documentation between minutes of CSR committee or board of directors and actual amount spent. So whatever amount was approved by the CSR committee, that same amount has been spent. The projects for which it was approved, the amount has been spent by the entity on those same projects. That is when we will actually test the spending done. We'll need to have a corroborative evidence that both the places where we are documenting, say where we are documenting the minutes of the meetings and where we are documenting the amount spent, they both should be in sync. Amount to be spent, the project on which it is to be spent also will be very important. Say whether it is an ongoing project or other than ongoing project, whether the CSR is to be undertaken by the entity itself or will it be undertaken by an implementing agency. We will discuss on these in the coming slides in detail. Then the next part will be to document if the CSR contribution is within the guidelines of Schedule 7 of the Companies Act. Like the Schedule 7 categorically mentions certain activities for only which are permitted for CSR expenditures. So we'll need to match those, that the activities which are being done by the audit client, they are falling within the ambit of Schedule 7, and we need to document the provisions of Schedule 7, the activities done by the client, and to conclude that both are in sync, and to conclude that the expenditure which is being done for CSR is actually legible under the Act. Also, now there are penal provisions in place for non-compliance with CSR. Earlier, it was either you spend the amount or you could just disclose in the board of directors report, but no longer so. So, any penal provisions arising out of non-compliance, those will also have to be appropriately computed and documented as in our audit file. So the penal provisions, specially which are applicable to the company, that is twice the unspent amount required to be transferred to any fund included in Schedule 7 of the Act, or unspent CSR account as the case may be, or 1 crore, whichever is less. So the provision will have to be made and documented for the penal provisions applicable to the company in the books. So these were some of the generic guidelines around CSR in general to take care of while auditing and while documenting. Each of the factors mentioned will have to be documented in detail to arrive at a conclusion, since this is a reporting requirement under CARO 2020 as well. So now we'll have a look at some of the amendments that have come in for reporting of CSR expenditure under CARO 2020 and Schedule 3. So the first one is reporting in respect of, so just like we discussed, we would now take into detail reporting requirements around ongoing projects and other than ongoing projects. So the auditor will need to verify any unspent amount in respect of other than ongoing projects, and that they have been transferred to funds specified under Schedule 7 of the Act within a period of 6 months. Similarly, for ongoing projects, it will have to be transferred by the company within 30 days from the end of financial year to a special account to be called as unspent corporate responsibility account for that year. Again, there have been amendments in reporting requirements under Schedule 3, wherein the company is required to mention the amount to be spent by the company, expenditure incurred, shortfall, provision of previous year shortfall reason, nature of CSR activities, details of related party transactions, and where a provision is made with respect to liability, just like we discussed earlier, uh, by entering into contractual obligation, the movement and provision during the year should be shown separately. So just to elaborate on the details of related party transactions being asked here. So as we know, many large or small corporate groups, they have implementing agencies wherein they carry out CSR activities on behalf of the entire group, say for Tata Trust or for Reliance Foundation. So if the company is doing CSR activity through such entity, maybe of the own group or maybe of somebody else, and if it is of the own group, then that entity would be a related party entity, and CSR activities done through that related party will have to be disclosed here. So now we'll look into detail for the documentation requirements around these. So first of all, going by the definition of ongoing project has been specified under Rule 21 of the company's CSR policy rules. That is, it is a multi-year project, timeline of more than 3 years. Project not approved initially as a multi-year project, but whose duration has been extended now based on board approval. What care needs to be taken care of is that the maximum permissible time limit for such a project is 1 + 3 years. Then coming to the unspent amount, like we discussed earlier, it is to be transferred to an unspent CSR account within a period of 30 days if any such unspent amount arises on ongoing project, that is the amount that was allocated to be spent was not spent. Next is other than ongoing project, a project of course which does not meet the above criteria, and the unspent amount arising from such a project will need to be transferred to a fund included in Schedule 7 of the Act within a period of 6 months from the end of financial year. So some of the key points for documentation around here are to document the project that the CSR or BOD has recommended ongoing, other than ongoing, and their related disclosure in financial statements and CARO. To document the amount spent, remaining unspent for each project. For this, a detailed evaluation will have to be done of the amount starting from that was required to be spent as approved, the amount that has been actually been spent, what we document and what we ordered as part of our audit procedures, and the amount remaining unspent. Then the compliance we'll have to document for compliance with provisions of section 135 with regard to transfer to a separate bank account within 30 days in case of ongoing project. So we'll need to bring that evidence on our file, maybe by way of bank statement, bank transfer, that the amount has actually been transferred. In case of unspent amount, it is earmarked for CSR activity. So it has to be there is a specific criteria for opening of a separate bank account along with the name of that respective financial year. So that will have to be taken into account. We'll have to document compliance for other than ongoing project. That is, amount is to be transferred within a period of 6 months from the end of financial year. Uh, Also, special care will have to be taken when the amount is to be spent through an implementing agency, as every implementing agency will have to get itself registered on the MCA 21 portal. And if only and only if the implementing agency is registered, can we spend CSR or do CSR expenditure through that implementing agency. Another care of caution is mere donation of fund to an implementing agency shall not be construed as amount spent. The implementing agency actually needs to spend the amount and have a utilization certificate for the same. And that utilization certificate of the implementing agency by a chartered accountant or the auditor of that agency will need to form part of our documentation. Mere disbursement of funds to such an agency will not contribute as CSR for the company. This has been categorically been stated in the FAQs on CSR, and hence, if we actually do not take care of the utilization report of the implementing agency, we could actually have a miss. We could actually miss a reporting in CARO wherein we would show that the same has been spent when it is actually not considered to be spent. So we'll have to carefully document around this especially if the CSR activity is being done through an implementing agency. In case there is delay in transferring to unspent CSR account, the same will need to be mentioned along with the date of transfer, subsequent transfer, and why the delay was there, and we'll need to document that in detail. And also now there's a provision to carry forward excess CSR spend amount. So if the the client decides to do that, we'll also need to document the requisite board approval, what amount was actually approved by the board to be carried forward, and whether the same has been carried forward and the same is matching with the disclosures in the financial statements. So this also concludes our presentation for the day. We have concluded with the CSR topic as well. Sir, now if we could open for questions.
Thank you so much, ma'am. Can you hear me?
Yes, sir.
Ma'am, thank you so much for wonderful deliberation and explaining all of various intricacies in various parts, the documentation which are related to various aspects, whether it is CSR or in any other manner. So it was a very elaborative and in a very lucid manner. I have received certain questions from the members. If you allow, can I raise certain questions, madam?
Sure, sir.
Yes, ma'am. Ma'am, first question is how would the digitization impact the volume of documentation during audit as compared to the traditional audit?
So to answer to that, of course, by way of digital medium, we could carry maybe a larger volume of data, as this would take away the storage problem. But again, both the physical documentation and the digital documentation carry its own risk. In case of physical documentation, it is, say, the physical security of the documentation and the ability to pull out the documents when required. And if it is in the digital documentation being done, then the cyber security risk or the technology risk that we carry and what measures are employed for that.
Yes. Should auditors have adequate knowledge of SAP software relating to this if we are talking about the digital documentation?
So
Or
now
is it
since
required to have the knowledge of SAP or it is compulsory to have the SAP knowledge?
okay, so point well taken. So since most of the companies nowadays, mostly say MNCs or companies which have a wide range of operations, they tend to go for ERP systems, say SAP, Oracle, or any such systems. However, we cannot say that it is necessary to have knowledge of that, but a basic working knowledge should be good. Maybe even if it is not like covered by way of a professional knowledge, taking some extra by way of some extra means, some working knowledge would be good, as that would ultimately enable the auditor to be more efficient in their audit process. However, since the auditor cannot be an expert in the SAP environment, it is always better to have somebody on the audit team, maybe by way of auditor's expert or by way of an audit team member, somebody who is proficient with SAP system, so as to provide that evidence to the auditor when we are auditing around the system, when we are auditing for the automated controls.
Yes, ma'am. Ma'am, one question is how many years documentation are to be required to be kept? Whether soft copies are serve the purpose or hard copies need to be kept as a documentation. And for the number
So
of
what
years we are supposed to keep it as a documentation.
So the SQC requirement is for 8 years. That is irrespective of whether the documentation is in soft copy or in hard copy. So whatever documentation we finally conclude is part of our audit file, that will have to be retained. It is irrespective of whether it is in, say,
Soft or it is in hard.
soft or hard copy. Yeah, it will have to be retained for the number of years specified under SQC. And also, if there is any other regulatory requirement which governs the entity, then that would also come into picture.
One question is exactly two questions are relating to a specific audit. One is relating to the tax audit, and one was the relating to the Ind AS. So, member is asking, can you elaborate or guide us what documents are to be keep or kept while doing tax audit, particularly to close Section 44 or Section 44 AD, as well as the Ind AS documentation?
So there is no such hard and fast, say, list of documents that are required. So just like we discussed through our topics that we mentioned, so as and when we go along, whatever steps that we take to audit, say whatever is required under the statute, say under the section 44AB, or say if the client is following India's requirements. So whatever steps that we go through as part of our normal audit documentation, a normal audit process, so supporting documents for each of those processes will have to be retained. There is no, I guess, hard and fast list as to what is to be retained or how, what is to be retained. But whatever procedures we'll do, to support that procedure, some we should have some audit documentation on our file, maybe by way of, say, minutes of meeting if it was a discussion, or some if some copies available to us, then that. Or if some recomputation has been done by us, then that. If some evaluation has been done by us, then that. Opinion taken, then that. So it will depend on case to case basis. But yeah, effectively, whatever procedure we follow for audit, all those procedures will need to be supported by audit documentation.
And one question is, ma'am, relating to the member is asking, in some companies there are foreign directors who are not easily accessible. In such cases, what is your recommendation for TCWG?
Mm, so yeah, so good question to be taken into account. We'll have to, if we conclude that they are a part of those charged with governance, and we are required to communicate with them under SA 260, maybe we could start the communication process early on, or take them into account, like during the start of the year itself we could start the communication process. Whoever, if we are not able to directly reach them, whoever we have part as their India counterpart, whoever we have, maybe we could appraise them as to what the requirements are, put it in writing with the statute requirements that these are the factors because of which we'll need to communicate with you, or maybe have a translator or something in place if there is a linguistic barrier, and then establish that communication, maybe make it more robust, give it more time. Don't do it in a time bound manner, because if we are nearing the audit sign off and then that such communications are being taken place, that and if you're not able to communicate, we'll have to evaluate, like on our audit opinion, what bearing it could have. So my suggestion would be to have ample of time, so that even if the communication process is delayed, ultimately we are able to communicate and to take their Indian counterpart into account with us, and ultimately whatever we are required to do under the standard we'll need to do. Just this limitation should not bar us from following the provisions of the standard.
Yes, ma'am. Ma'am, last question. This is relating to the CSR. CSR was shortly transferred to unspent CSR. Amount to extent of around 5 lakhs. Amount is not material due to the miscalculation of profits as per section 198. So how we are supposed to document the same and address it in the audit?
So I guess we covered that by way of various things. So of course, if an amount is unspent amount, like if there was an unspent amount which is now discovered, firstly it should be transferred as soon as possible, as soon as it was discovered that this is an unspent amount. The section does not take into account any materiality over here. Also, there are penal provisions in place, what we also covered for the company and for the officers in default. So provision for that, if required, will have to be done in the financial statements. Appropriate reporting will have to be done under in the financial statements and in the Caro report, and ultimately it will be the auditor's opinion to conclude as to whether it has any implication on the opinion or not.
Yes, ma'am. Thank you so much, ma'am. Now we have come to the end of today's webinar. It was great to have you on this stage of the platform of AASB. We have gained a lot thoroughly. Exactly, I have gained a lot through your deliberation, and hope our members have gained a lot today with today's deliberation on documentation, and the manner you have explained in the various parts you have explained. It was very good and very in a very lucid manner. So on behalf of AASP of ICI, I extend my heartiest thanks towards you for sparing your valuable time and enlighten all of us on various intricacies on documentation in audit. Thank you so much, ma'am.
Thank you so much, sir. Thank you.
Thank you so much. Thank you. Thank you. Namaste.
Thank you.